Hey everyone, and welcome back to the Rich Habits Podcast, a top 10 business podcast on Spotify, brought to you by Public.com. This episode of the Rich Habits Podcast is going to be a little bit different as we are joined by Bo Hansen and Brian Preston from The Money Guy Show. We are big fans of the show. I was actually on their show just a couple months ago. I'll have a link for that in the description below. They're also from around the Nashville, Tennessee area. I think they're over in Franklin, which is right around the corner from me. So we're excited to finally connect and have them here on Rich Habits.
And Austin alluded to it, but this episode is going to be less educational and more edutainment as we host our first ever 2026 Fantasy Financial Draft. So if you're into game shows or fantasy sports, you're going to love this. And here's what we're going to do. Austin, myself, Brian, and Bo are going to choose 5 wealth building tools from a list of 20 that we believe are the best tools available to build wealth no matter your age.
And then after all 4 of us have chosen our team of wealth building tools, we'll then answer the questions as a group. Whose team is best for someone that's trying to build wealth at 25 years old? Whose team is best for someone trying to build wealth at 45 years old? Whose team would create the most millionaires? And maybe some other fun questions that we come up with. But we think this type of episode is going to be so much fun, and we are so grateful that Brian and Bo are hanging out with us today.
And we'll draft these names snake style, which means Austin goes first, of course, then Brian, then Robert, then Bo twice, back to me, then Brian, and then Austin goes twice, and we go back and forth until all 20 wealth building tools have been chosen and everyone has their respective teams.
So with that said, let's now jump into the episode with Brian and Bo. Brian, Bo, thank you all so much for hanging out with us here.
Austin, Robert, always a pleasure. We were super excited about doing this. And by the way, love the concept. So we knew you were going deep into the benches of knowledge when you decided that we were the perfect experts for this.
This episode is either going to be the most viral episode the Rich Habits podcast has ever done, or it's going to flop and people are going to make fun of us and say, stay in your lane. We want education, not edutainment. And we'll see what happens after we get through this.
I fully anticipate that after this, most major league professional teams are going to reach out to see how well we do at a draft. They're going to be like, hey, we need some experts to help us along with this.
Oh, so you're going ahead and claiming the Brad Pitt from Moneyball
that's it.
Position
that's
in this
pretty
whole
much what
process.
I'm doing right now. That's
Okay.
the role that I'm playing here.
All I know is that I'm so excited for today's episode, man. We're going to jump into some really great things. Had to do it.
I love it. I love it.
Can I give a little bit of feedback, though? Because I
Let's
think
hear
it's
it, man.
brilliant
Let's
to
hear
do a fantasy finance draft. Because there are so many, I want to gas you guys up on what a brilliant idea it is, because I think it also correlates to what we as individuals, when we start earning money, how we just have this whole list of things to invest in. But then let me go ahead and tell you all the problems with this. I have a overlaid dilemma because I was like, when I make my choices, do I do this as the financial order of operations? Because the FOO is the widest. It's going to create the widest path of success that's going to get you. So like a 401k, going to be a great pick. You know, and I'm the number 2. So Austin, don't steal that
You're
first
giving
pick.
some stuff away here.
No, it's
I'd
all
be
right.
careful.
It's all right.
I'd be careful.
Or should I go sizzle? Because this is, we're content creators and we all know sizzle, sexy sizzle is what kind of sells and gets the clicks and stuff. And a lot of these things on here, and I'll just go because we have them capped. I thought it was brilliant how y'all put them. The 401k, that's FOO all the way. But then down the bottom, you got entrepreneurship. Entrepreneurship is this sexiest daggum thing in the world. So yeah, if you want to look cool, but what that doesn't tell you just by choosing it, this is the running back that in the first game of the season blows out his Achilles heel. So this thing is going to go bad really quick because that's what entrepreneurship looks like. And then you got the finance bro class, this is what all the social media that's not in the healthiest side of things, not our shows, of course, kind of tell you how you create wealth. So I could put any one of these overlays. And then for giggles, y'all put down here what I call fundamental foundational items like career improvement, networking. These are really powerful things on building your shovel. But how much sizzle? This is like the good defense in a fantasy football draft. So I'll be curious to see how we do this.
I think this is going to be a very interesting episode. And that's a great segue into sort of how this is going to work. We did a pretty good job, I think, laying the table and making sure everyone understood in the intro here. But just want to remind everyone, we've got 20 wealth building tools here for Bo, Brian, Robert, and myself to look at. And we're going to walk you all through what those 20 are. And then over time, try and do our best to remind you all who's got what's going on here. Because we don't want it to be something you guys got to keep tally on here at home. So let's walk through, without further ado, the 20 wealth building tools that we will all be choosing from to build our teams of 5. We've got number 1, the 401k.
Woo!
I don't think I was expecting that one.
Just go and get ready for 20 of those. They're coming your way.
No, it won't be for all of them.
So we got the 401k. We've got a Roth IRA. We have the HSA, house hacking, rental real estate, the S&P 500 index fund, small business ownership, side hustles, dividend ETFs, covered call ETFs, cash flowing real estate, private equity and venture capital, bonds, gold, Bitcoin, international stocks, skill development, networking, career switching, and entrepreneurship. So those are the 20 wealth building tools that we will be able to choose from to build our teams of 5 here. And then again, at the end, once we have all of our teams, we're going to sit down and say, okay, which team is best for a 25-year-old? Who has the best team for perhaps someone listening that's 45? Who's got the best team that's going to build the most millionaires? Like, we're going to have some cool discussions about this at the end, but let's jump into it. I'm ready to go if you guys are.
I'm ready.
I'm ready. The only thing I would say is, you know how like with fortune cookies, you can add sentences on the front at the end to entertain yourself? I think at the end, my team should get SpaceX and Pokemon cards just to make it a little more fun and add a layer for my team. It's just the Brian dividend.
And the only thing I want to add to click back on both of you and for everyone listening and watching this episode, you notice we didn't add any of the 5 or 10 fake guru things that you could have in here for your financial draft. We left out all of the crazy things that the fake gurus talk about. These are just the real things that actually build and help people maintain wealth over time.
Yeah, we noticed we didn't have whole life insurance or infinite banking or, insert other crazy thing you saw on TikTok here.
IULs, Forex trading, all of the other things.
All right, y'all, let's jump in. So here's what's going to happen. I'll go first. Up next is Brian. Then there's Robert. Then Bo goes twice. Back to Robert, up for Brian, and then I go twice, and we keep doing this game snake style until we all have 5 team members in our team here, 5 tools. So the first tool, I'm gonna take it. I'll take the S&P 500 index fund. I will be taking that one. That to me is integral. So I'll be adding that there to my team. Austin has the S&P 500 index fund.
Okay, I'm going to, because this is one, and I appreciate you taking my subliminal cues and not stealing the 401k. Because you're going to get that free money, and you can use the S&P index fund in your 401k.
Hey, not if you don't have it. Not if you don't have that. Not if you don't have that tool, right? That Austin's got. You can't use another player that's on another team.
Don't ruin my fun.
I'm just saying.
All right, so we got the 401k here for Brian. Over to you, Robert.
I'm going to go with the easy layup, the Roth IRA.
That's a great pick. Great pick.
The Roth IRA, the greatest wealth building tool known to mankind for all of these younger people, especially that are just getting started.
All right. That relieves it to me, since there have been some
Two picks. That Bitcoin's still sitting out there for you, Bob.
Fantastic ones that have come off the board. Since Robert called the Roth IRA the best investment vehicle known to man, I'm going to just one up that a touch. I'm going to take the Roth IRA on slight steroids with a health savings account. I'm going to go ahead and take that one off of the board because it's like a Roth plus a little bit extra, a little bit more.
Did y'all just see Bo just drafted a punter in the first round?
No.
Don't we love it when we all have a friend that does that to you?
Hey, if you like the Roth IRA, then you should love the HSA. Now, I'm going to change it up a little bit now. After the HSA, I believe that one of the best ways to build your wealth is through the shovel that you're able to create.
There we go.
So I'm actually going to go with, and see, I'm taking a risk here. I'm going to go with skill development
It's a solid pick.
as my next one, because I believe the better my skills are, higher I can drive my income.
That is a great pick by Bo. Oh my goodness.
That's pretty out there this early on in the game, but I do like it. I feel like he's got his the place kicker, so he's good. He's got the punter and he's got the field goal kicker.
Well, now, now I give him credit. I think he did do the punter first, but I think he then immediately went to a very strong quarterback because that's what your income or your shovel. I was kind of hoping those type of things were going to be lingering around for me to steal when I got my second pick.
Okay, so I'm going to go with a number here with my pick. 17,000% return over the last 10 years. People can argue, say it's a bad pick, but I'm going to go with Bitcoin.
We've got Bitcoin over for
See, Robert and I are of a certain age. I think he just wanted the cool factor there. That's all right. I do the same thing. It's kind of like the shoes I'm wearing right now. I shouldn't be wearing them, but they make me look younger and feel younger. So I completely get it.
All right, Brian, over to you, my friend.
There's one that I almost want to grab just because of the sizzle factor of it. And it, but I don't think it's not the reality of what I think actually creates. This is why Bo and I share a brain. I'm struggling between networking and career switching because I think the bigger your shovel, the more success you can have in those foundational years. So you can save more and then use even more of these tools. I'm going to go with networking.
Networking. I like that. Where are some of your favorite places to network? We networking on the golf course? We networking at professional societies?
Well, I mean, in the early years, yeah, it was kind of going, go to the Georgia Society of CPA conventions. Conventions were always huge for me just to go meet other people. And then when I was trying to get business, it was more of you have to kind of either at the golf course, you could do community affiliations, you could do schools with your kids. Those things are always Neighbors, I got great clients out of Neighbors.
It's weird. In the world in which we live today, I feel like the number one place that we network the most is actually on the internet with other content creators. Some of the relationships, just like this, some of the relationships we've ever built are other people doing similar things in different places. It's been a great place to make connections and build relationships that maybe wasn't around 20, 25 years ago.
I completely agree. Robert and I are big believers and everyone can win together. It's not a zero-sum game. And I think that is just American capitalism in general. So I've got, just to make sure everyone's on the same page as to what's left, we've got house hacking, rental real estate, small business ownership, side hustle, dividend ETFs, covered call ETFs, cash flowing real estate, private equity and venture investing, bonds, gold, international stocks, career switching, and entrepreneurship. So I'm up next here. And, I'm torn because I'm thinking between side hustle and entrepreneurship, but I'm leaning side hustle, and here's why. I think that not everyone should be an entrepreneur, and that a lot of people throw themselves into entrepreneurship without knowing what it might entail to be an entrepreneur, and they find themselves going backwards financially. And they find themselves on a hamster wheel. Where on the flip side, back to this idea of finding margin in your budget, a lot of people that have effective side hustles can take that money, if it's a couple $100 or a couple $1,000, whatever it might be for you on a monthly or annualized basis, and they can put that money to work. If it's paying down high interest debt, if it's getting invested, if it's, being more strategic with their sinking funds, whatever it might be. So I'm going to go side hustle here as my next pick. I think side hustles are super important. So I've got the S&P and I've got side hustles on my list. I think the way this goes, I go again, right?
Yeah, you snake it back around.
Okay, so here we go. Ooh, what's a deep ball I can throw real quick? You know what? If we're going to talk about building wealth, we got the side hustle. Guys, I think my team's winning right now, to be honest with you. I've got the S&P and I've got side hustles. I might just go for the kill here and take rental real estate off the table. If you've got S&P, you've got some extra side hustle money and some rental real estate that's rolling for you. Oh, wait, rental and cash flowing. Crap, what's the difference of that, you think?
No. Wait. Did he take his finger? He took his finger off of it, right?
We're playing Sharpie rule. I did take my finger off, but let's maybe define that.
Well, because when I think of rental real estate, it's the opportunity to one day have something that can have either a cash flow return or a capital appreciation return. It is different than cash flowing real estate, because cash flowing real estate is I am buying something today that has a tenant in it that is already generating positive cash flow. There is NOI when I acquire it. Very different from someone who says, hey, I'm going to go out and buy this property, turn it into a rental, I'm going to become a landlord. two different segments of the rental investing stratosphere, I think one is more valuable than the other.
So, Austin, I'll go ahead and tell you, when I was going through and handicapping these, real estate I put is under the sexy sizzle, meaning that it has a really cool brochure.
Yeah.
But it was when I got to cash flowing real estate, I actually put all the above because, I mean, if the property pays for itself, that's a superior transaction compared to the brochure one that just is the opportunity that you might make money.
Let's go. Let's go.
I feel like I just fumbled. I totally did not know that we had both cash flow real estate and rental real
Well, you
estate.
kind of got
on
the
here.
same thing with small business ownership versus entrepreneurship.
No.
I have a difference on those two
Very
as well.
different. Those
Yeah, I
are
think
not
those are
the
different.
same.
I should have gone cash flow real estate. I think
No,
that-
but you did. I mean, we didn't take that from him.
No, he went rental real estate.
Oh, are we going to be that
he
type of
went
guy?
rental real.
Seriously, we're not going to let Austin have cash flow real estate?
Do you think if you were at the NFL draft and you call the wrong player's name, you get to be like,
Austin,
oh, no, I didn't mean the punter.
I'm going to be the beneficiary of this rule change here, but I think you should get credit for cash flow real estate. Are we really not going to give that to him?
I don't think we
I'll
can.
take the rental. Don't worry, guys. Give me rental real estate, my rental real estate. I just bought it. I'm renovating it, and I think it's going to cash flow great. So there we go.
And guys, remember one thing. When we get through with our draft, you got to remember we're going what team would be best for a 25-year-old and a 45. So rental real estate is the young man's brain because he's building up. Cash flow is later on for those 45-year-olds. They've been building the rental real estate portfolio into a cash flowing machine.
It's also, I know when we've looked at real estate, what I was thinking, because I thought cash flow real estate was going to be taken. So I'd actually already written down house hacking because that was going to be my kind of cheat code, up, down, left, right, BA, so that we could get into housing in this crazy marketplace. But now that, cash flowing real estate is there, I feel like I do have to take it because it minimizes leverage debt is very risky. But if you can get into it from a cash flow, I feel like I'm buying real estate back when you could follow the 1% rule. Back when rents, you just take with the purchase price and the rent. And that was, back when interest rates were super low, you could shoot fish in the barrel like that. And I feel like I got to take advantage of that a little bit.
Well, you guys left me open for the coup de grace, the game-winning slam dunk, Jordan over everybody, small business ownership. The numbers don't lie. The numbers don't lie. Small business owners, self-employed families make 4 times more than wage-earning families over their lifetimes in net worth. So I have to go. I'm the small business owner guy. I've got small businesses everywhere. I got to go with the small business ownership.
Now, I want to ask you, Robert, because this is just to clarify, what's the difference between that and ownership? I had a difference in my brain with
You
the
mean
difference.
entrepreneurship?
Yeah, entrepreneurship and small business. Which one? How did you differentiate between those two?
Because I think entrepreneurship is fantastic if we want to have a blanketed answer, because you can be an entrepreneur with a single employee business that maybe makes you $1,000 a month extra in money. Whereas I feel like small business ownership is a little more defined and a little more organized, because a lot of people out there, especially in our world of social media, there's a lot of people that call themselves entrepreneurs. And I say, well, where's your office? Where's your business? What kind of LLC? Are you an S Corp? Are you this? They don't have any of that. So to me, entrepreneurship is a little too loose fit for me when we're defining it in a matter of how to build wealth and keep it for these various age groups.
Can I offer a similar but different perspective on that? When I read these, when I think about entrepreneurship, I think about someone who's a founder. I came up with this idea and I founded a business and I want to grow it, and I am employee number 1, starter number 1. When I think about small business ownership, I think about someone who sees a business that's already operating, likely already has a positive cash flow, likely is already profitable, and I'm now acquiring that small business. I thought about them as 2 different stages of the business cycle. Could be off on that, but that was my differentiator.
No, I can see, because when I saw small business, because I know there's a lot of people that are, there's a reason when you join like an entrepreneur group, business brokers come and usually want to give you lunch and learns and other things because they're selling business transactions, small businesses. And there's even the whole blue collar businesses that you can go out there and buy nowadays is a whole thing. We saw it with storage.
Yep.
Storage units, businesses
full
and
service,
so forth.
home service.
So it's interesting, but I like how, Robert, you make a solid point though. It I remember when I was reading The Millionaire Next Door or Stop Acting Rich and all the Dr. Stanley fundamental stuff. It is amazing when you think about how many wealthy people are small business owners.
Yeah, 100%. I mean, I feel that most multimillionaires that have these boring businesses, whether it's a fest company or it's a roof company or an electrical contractor, whatever it may be, most of them, either built the business or bought it from an uncle or a grandfather or whatever. So I love the term entrepreneurship, but it's just a little too vague for me in this forum of this draft, because I feel like small business ownership, we can look up the stats and we can say, all right, a lot of millionaires are made through small business ownership. So that's why I selected it.
When I was working in public accounting, the biggest client of our firm was actually an HVAC company. Now, when you think about an HVAC company, they had just tons of vans and stuff. And then you move to the state of Tennessee and then you find out, oh, the governor, he's mega wealthy. Yep. And what did he make his money in? Oh, home improvement, HVAC systems and other things like that. So there's definitely a lot of money to be made in those systems.
Well, but also we see every day in social media all of the fake gurus that fall under the entrepreneur tab. They've got their big watch. They're leaning on their rented Lambo in the driveway of the Airbnb they rented to shoot content. So that's why I went that route. I just love small business ownership. I think it is one of the greatest paths to wealth, because if you do it right, it's consistent. So we can move on, but thank you guys. I appreciate that.
No, I love it too. And just to bring it home here on entrepreneurship, again, I don't think everyone should be an entrepreneur. I think the word entrepreneur is sexy. It's fun. It's cool to say, yeah, I'm an entrepreneur. I'm a founder. I do this, I do that. But a lot of these entrepreneurs, they find themselves either going into high interest debt to fund their endeavor, or maybe they fund things incorrectly. They go backwards in life, where small business ownership, to Bo's point, yes, I 100% see that as an acquisition of some sort of existing cash flowing business. And small business ownership is a wonderful way of building wealth over a long period of time, assuming you're an owner operator, you understand what you're doing, and it's not just a fly by night, something that's going on. Real quick, Robert, before we get back to our episode with Brian and Bo, Capgemini just released the 13th edition of the World Wealth Report earlier this month. And according to that report, the wealth of high net worth individuals grew almost 9% last year, which is on the strongest pace in the last 5 years.
Buried in that report is an actual rich habit. Capgemini surveyed 6,500 wealthy investors, and nearly half named the same priority: fractional ownership of real assets. Not just more index funds, shares of real scarce things.
And outside of the report, this is exactly what today's sponsor, Masterworks, does. And we've been invested with Masterworks for years now. They're opening a market that's shown to move independently of equities for 30 years. That kind of independence is really hard to find right now, as it seems like everything is kind of moving together.
With Masterworks, you can invest in shares of museum quality post-war and contemporary artworks featuring Banksy, Basquiat, and Picasso without spending millions. Over 70,000 members have invested more than $1.2 billion over 500 artworks. And across 29 exits to date, investors have seen net annualized returns like 16.5, 16.6, and 17.8%, not including those unsold.
And the art market has been making some headlines this year. Over $2.5 billion worth of art sold at auction just in May, more than twice the amount of 2025's May auction season. And the UBS Art Market Report says the global art market returned to growth in 2025, with the $1 to $5 million range growing over 40% since 2024.
So the wealthy are literally telling their wealth managers they want fractional access to real assets, and Masterworks has already built it. As longtime partners, our listeners can skip the waitlist at masterworks.art/rich habits. That's masterworks.art/rich habits. Link in the show notes below.
Investing involves risk. Past performance is not indicative of future returns. See important Regulation A disclosures at masterworks.com/CD. All right, Robert, back to our conversation with Brian and Bo. So we got Bo next.
As I think through this, right, one of the ways that we build wealth is that we have an appropriate understanding of risk. And if we can find ways to build wealth and achieve that while de-risking, I think that is a wonderfully valuable thing to do. And one of my absolute favorite ways to be able to enter into something that could be otherwise risky, but offload some of that risk, is through house hacking. So I'm going to go ahead and take that off the board, because now I get to be a real estate investor, but I get to do it a lot more easily than a normal real estate investor. I get to actually live in my house and likely live there for free if I can get someone else to cover the note because I'm house hacking.
Easier underwriting, lower interest rate.
All of those
It's,
things.
all these things, and it's other people's money.
And so now, since this is a snake draft, now that I've de-risked, what I've allowed myself to do, because I have a very low burn, a very low capital requirement to run my lifestyle, I've also developed some skills now.
Okay, here we
I
go.
am going to now use that
You
to
can buy
go
some
out
gold.
and start my own business. I am going to be an entrepreneur,
That's a good
and
pick.
I am going
pick.
to blow this thing up, because all of the stats that Robert shared about how successful small business owners are still hold. I just get to be founder number one.
Good for you, man.
Love,
I like
love
that
it,
a lot.
love it.
That's a really great approach to thinking about it, right? Keeping that monthly burn as low as possible. Because, yeah, I mean, a lot of small business owners, entrepreneurs, whatever you want to call it there, people that want to go create things and companies, they find themselves quitting their jobs right off day one and say, I've got this idea. I'm going to quit my job and go either raise money or go into tons of debt to go fund this venture. 6 months later, it blows up in their face and they've got the mortgage, they've got the kids, tuition. It's a whole thing. I like the way you approach that. That was very, very smart.
All right, here's my story. So I've got my Roth IRA with my basket of funds. So I've got my base covered. I've got my Bitcoin for the long-term growth. I believe in that. I own my small business, so I'm printing money every single month, building my wealth to go into my account. Now I am ready for the next phase of my investing journey, and that is private equity and venture. I'm going to get a percentage of that money working in these companies that are pre-IPO startups, some of these things that fall into that entrepreneur category, because I want to take some risk with some of this money I'm making. Now that I have all my other bases covered, I'm going to go into private equity and venture.
Good pick. Good
We
pick.
are getting down to the.
Yeah.
I know what I'm happy that I'm the next pick because I think I've got the last easy pick, and then this is going to get a lot harder. I thought it was interesting that I was the second pick, and I was like, man, I wonder what Austin's going to take as the first pick out there, and he immediately went for the S&P 500. Well, look, if you think things have been great domestically, let me tell you about there's parts of the country, the world right now that they are discovering this wonderful world of innovation and the law of accelerating returns that I think you have to look at international investing or international stocks is kind of being the next thing that I'm going to build to. I wish it was an international index fund, but I'll take international stocks and make my own index fund.
I like that. That's a great pick. So just to make sure everyone's on the same page, the handful of names left here, wealth building tools left are dividend ETFs, covered call ETFs, bonds, gold, and career switching. So I've got the S&P 500. I've got my side hustle. I'm making some extra money on the side here. I'm putting that in the S&P 500, right? Put that in my rental real estate. I'm really in this wealth building phase for my team. So now the question is, do I want to maybe start earning some income on what I've built with some dividends and some covered calls? Do I want to perhaps maybe protect my downside with some bonds? Maybe some gold here, or switch up on careers? The right answer, I might get some pushback on this, but at the end of the day, building wealth is one thing, but preserving wealth is another. And we all know the 60-40 portfolio is 60% equities, 40% bonds. And so I'm going to lean in here. I'm going to put bonds right up next to my S&P.
Wow.
I got S&P, I got my side hustle, I've got my rental real estate, and I've got bonds, so that my portfolio is now diversified across equities, fixed income, real estate, and some extra money I'm earning on the side.
This is how you know Austin's actually successful.
He thought
It's
of it,
because
yeah.
he chose the unsexiest pick on the entire list. I mean, it really is. There is no sizzle whatsoever with the bonds, but it is a very effective tool for capital preservation.
But now you get another pick, right? We snake it right back around. So you get to follow
it makes
right
it
up.
easier.
All right, you're so right. Oh my gosh. Whoa, goodness gracious. Do I go with gold, career switching, covered calls, or dividends? You know what? I'm already in real estate. I'm already seeing some of that passive income perhaps. So give me a good dividend growth ETF. Give me an SCHD, a DGRO, one of these cool things. I want to really lean into now that side of my portfolio. Give me some of that rental, give me the bonds, and a little bit of dividends here. We're going to retire early, fellas. We're retiring early.
God, it's funny. I think the one I'm going to pick, just because, we were down to, correct me if I'm wrong, just covered call ETFs, gold, and career switching.
Those are the three.
Yep, that's correct.
Look, I've created a business that Bo, I met him in college and he's still here. It seems ridiculous that you choose career switching. So you can be conspiratorial, but and own gold, or you can just be a person that reads a lot of news and not own gold. So I don't know if that's me. I think I'm going to go, we have a whole relationship with Jack and Graham, and Jack, last time we were on iced coffee, just went ham on some covered calls. And I think it's funny today because we've been trading texts with those guys, because the stock that Jack does covered calls on, he got just smoked on it. But I think, why not for Jack? Let's go ahead and choose covered calls.
Look at that.
Because this is going to make my younger audience feel happy. I'm going to feel super sexy, sizzly doing options, so I can tell everybody at the Christmas party, yeah, we'll do covered calls.
I like that. That's awesome. Shout out to Jack and Graham.
You know what? That's actually not a bad pick, and because a covered call ETF, you're going to get equity exposure. You're going to have some income component to it. Perhaps you cap some of the upside a touch, but that's not a horrible wealth building solution. I don't hate it.
Well, let's talk. We're at the end of the list here.
Well, I just between that and bonds, it's
I'll take it. I listen, covered call ETFs. I think, we've got Neos funds. They've been a friend of the show for a long time, and they've got their tax efficient covered call ETFs. And so it's cool to be able to see that, this is up here. And I completely agree with Bo. You do have that equity exposure. Your upside absolutely is capped. So that's the big thing you got to think about. But if you're optimizing for income, shout out to those covered call ETFs.
Well, and who hasn't used options for like straddle strategies and other things? We get super concentrated positions. So there's definitely, in the wealth building journey, there's a lot of chance to use options if you know how to use them effectively.
All right, it's my turn.
I think I know what you're gonna pick.
You know what I'm gonna pick? I have.
Are you going to have Bitcoin and gold?
I have one of the greatest careers on earth, and I've been talking about precious metals forever. I think gold is a great play for me, even though I've got Bitcoin, because I've got both sides.
You got all generations now.
I've got all sides of the generation. I've got safe havens on both ends.
That's great.
And I believe gold, and I called this out on the Rich Habits Network last night. I believe by the end of 2027, we will see gold in that $6,000, $6,100 an ounce. And so for me, I'm gold all the way long. I've owned gold for decades now, and I still think it's a great position.
Well, I feel like the lost puppy went to the right home.
All right, Bo, giving you now career switching.
I guess I'll take career switching.
Oh my
guys.
God, Lord, no.
Man,
No, Bo, that's actually, I should have played this better. I don't want you switching careers
A
now.
lot of young,
I'm sad to see you guys break up after all these years.
You hear it here first.
Hey, a lot of young people would suggest that the way that you move up in this world and the economy in which we operate is not climbing the corporate ladder of your company, but rather it's developing a skill set and then changing employers, changing companies, changing opportunities in order to get those vertical bumps. And I don't necessarily agree with that, but it probably is a reality that a lot of people, that is the way that they've experienced increases in their income. So yeah, it's a thing. If you're not in the right place, you should find the right place to be at. I get that.
Let's now do a quick recap for everyone listening as to what our teams are. So my team of wealth building tools that we drafted here, I've got the S&P 500 index fund. I've got side hustles. I've got some rental real estate. I've got some bonds and dividend ETFs. Brian has a 401k. Brian is a just masterful networker, all about networking. He's got some cash flow real estate. He's got his international stocks and his covered call ETFs. Robert has got the Roth IRA. He's got Bitcoin. He owns small business. So he's got some small business ownership. He's got private equity and venture investing, which I think was a dark horse. That was a really good pick. And he's got gold. And Bo rounding us off here with a nice HSA. He's got skill development. He really cares about that income. He's house hacking. He's got entrepreneurship. And he's focused on career switching. Not because he picked it, It's because he ended up with it, but I'm sure he loves it regardless.
Can I ask him, can we all give like a closing or an advocacy statement for our portfolios?
Please.
Sure.
And you know what? You go first, Brian.
I think so. You should tell us why yours and who's your portfolio great for, I'd wonder.
Well, here's the thing. The genius in this was, I mean, if I was putting this in the order that I think about life, when you're young, try to boost that income up as much as possible, because that is where success lies in the early years, is if you can create a good income or trajectory to create income. Because I mean, when I started in public accounting, it wasn't great, but I knew that there was tremendous potential for it. So the networking and the career choices all kind of lined up. But what I like about the 401k, and this is the sleeper that I can't believe Austin left it for me, is we know that 401ks, yes, everybody thinks 24,500 is where they cap out. Oh, no. You know, for small business owners that we can strap a cash balance plan on there. We can push these. The 415 limits are already going well beyond what are we up to 70 grand?
$72,000 now.
So we're beyond 70 grand. We strap a cash balance plan that we can save another 150, 200,000. I mean, you could literally build hundreds of thousands of dollars a year if you have that big income to make it happen. I think it's amazing that then I get to have the international stocks, the covered calls kind of in the equities. And I'm hoping my 401k has some S&P 500, but then to have cash flowing real estate where I'm managing levered debt because I got to step 8 of the financial order of operations. This thing's pretty awesome. I am worried my small business owner peers, assuming they're on the successful side, because what is that? The 20% that made it through. If you're one of that, then that's great. But the other 80% that are back in the gutter, I'm feeling pretty good about mine compared to the high failure rate.
I think that's a great breakdown. I can't believe I fumbled cash flowing real estate. I saw rental real estate and I was like, oh, it's the same thing. Nope, completely missed it on the leaderboard there. So that's on me. I would have snagged it from you. But I like that breakdown. I completely agree. You've got a quite a star-studded team here to build some wealth, and I'm interested to hear.
Well, at some point, I want to trash talk everybody else's portfolios because I've got some.
Have you not been doing that the whole time?
No, I don't feel like I've even started.
He's been doing it the whole time.
I'll do it on one. Look, Robert's portfolio it's kind of got a lot of sexy sizzle, but this guy would be unsufferable at dinner parties. I mean, I would be so frustrated to hang out with somebody like Robert. He's got not only gold, Bitcoin, and then he's got small business ownership, and you strap on there, we got private equity and venture capital. This guy, you do not want it. If he does CrossFit, run the other direction.
I am so sorry that I do high rocks right now and I do all of this. I'm sorry that my wealth has created this illusion that I think my picks are the best. Think about it from this standpoint. Small business ownership, if you're successful, which is subjective in all of these, is incredible for people to build wealth faster than having a job or trying to buy real estate along the way. And I'm a huge real estate guy, but that's also why I took private equity, because where I missed out on the rental real estate and the cash flowing real estate, I can still own that piece of real estate through my private equity and my venture. True. So I like that. So I've got small business ownership. I've got private equity and venture, which is going to be part of in real estate as well. I've got the Roth IRA, so I can have my basket of index funds churning out money and making money while I sleep every single year. And then I've got my Bitcoin and gold as my dark horses that have had tremendous returns for years and years. So I think I have a very well-rounded portfolio, maybe a little more high risk for some people, but I think starting out from that 25 to 45-year-old range where we're talking about, this is the best move because you're covering all your bases while still giving yourself the best upside for real returns and real wealth building during that period.
Robert's portfolio is guaranteed to most likely to have an exotic car in the garage and a high-profile watch.
That is absolutely correct, and that very much describes Robert's life. He's got a Rolex collection, and he drives a Porsche and a Range Rover. So you know
Makes
what?
all the sense in the world.
Robert, you're making me a blast to hang out with, so don't take that personally.
If you saw my place right now, you'd be like, all right, I get it. I mean, I don't even know how I got all these picks. This is almost perfect. The only thing I was missing was the cash flowing real estate, which I knew I was never going to get to. But that's why I chose private equity, because in my opinion, the two best ways to build wealth. I love real estate, but real estate is very slow. It takes decades to build real wealth and cash flow. You hear all the fake gurus talk about, well, just own 5 single family homes and you'll never have to work again. And that's a ridiculous statement that they all use because they don't actually own 5 single family homes. And so for me, I like the private equity venture side as well because that can range. It can be real estate, it can be pre-IPO, late stage companies, or it can be startups. So that's why I like that because I feel like once I start making my money with that small business ownership and I've got my basket of index funds making money while I sleep, I've got that 5, 10, 15% that I can risk in that private equity, in that venture sector.
Bo, I'd like you to advocate for yours before I completely rip it apart.
Here's the thing. Mine is unbelievably well designed and well put together for that young person in their 20s. Mine's a young man's team. Because let me tell you what it is that happens. You get out and you get your first job, and that first job has a high deductible plan. And you don't have a lot of jingle yet, but you want to participate, put money in that HSA. So you're able to at least get your deductible covered. You're getting some cash in there. And you can at least get some money working for you. Now,
Less than $10,000.
Now, what you recognize, well, maybe you're married, maybe you have a family, maybe it's like 8,700 something, maybe it's that much. So you got the HSA going. But what you recognize is that early on in your career, you're fairly mobile. So you're able to switch jobs and switch careers a good bit, right? Like I do something for a year or two, and then I switch for a year or two, and then I switch for a year or two, all the while developing these new skills. So every time that I go to a new job, I'm developing these new skills. And what I'm actually doing is I am collecting all of this experience and all of this information so that when it's time for me to go out on my own, when it's time for me to start my business in my late 20s, in my early 30s, I now have all these different experiences that I can pull from. I've now done all of those things, and because I was able to house hack, because I was able to buy a place, have someone else rent part of it from me, pay the note, my risk is super, super low. So when I go out on my own, I get to put everything I have into this entrepreneurship to make it blow up into this amazing, life-changing, wealth-building opportunity. Make no bones about it. Mine is built for someone in their 20s.
Can I give you some thoughts on Bo's portfolio? Bo is making good decisions as a young man. He funds his HSA, to make sure he doesn't get in any trouble. I love the fact that he's spending time, learning skill sets, but he's gotten into this job by jumping around. He's working in careers, and he just can't shake the thought that, man, his favorite time in his life was back in high school when he was spinning pizzas on his hand. And he was like, man, it is all this working for the man and this career switching and this skill development. You know what I ought to do? I ought to go in to become an entrepreneur and start my own pizza company. And so he takes his pizza spinning skill. And the thing is, he's either going to be Papa John's and be a billionaire, or he's going to be delivering pizzas, because unfortunately, he's got a paid for house because he house hacked. That's it. There's about a 1 in 10 chance that he's going to be loaded. The rest of this it's going to be pretty boring.
So you're saying there's a chance.
Even if it does blow up in his face, he has the flexibility. He's a house hacker.
He owns his house.
I've got
with
skills.
an HSA.
Are you saying, Brian, that when they take the pizza restaurant away because it failed, and pizza restaurants fail all the time, we talked about small businesses, that at least he's not going to be homeless? Is that what you're alluding to here?
He's going, if he has a medical emergency because he cut himself making pizzas, he will have an HSA to cover his healthcare costs, and then he's going to have a house because he's using other people's money from the house hacking that allows him to at least not be homeless.
HSAs are the only thing here that are quadruple tax advantage. No other account here gets 4 different distinct tax advantages. It's the Swiss Army knife of investment accounts.
Now, I will say, I need to quit talking.
No, I agree. I think HSA is great, but here's the take I'm going to share, and I think all of you can agree with what I'm about to say. My team of wealth building tools will create the most millionaires out of all of us. My team wins and checks that box, and here's why. I've got the S&P 500 index. I've got side hustles. I've got rental real estate. I've got bonds, and I've got dividend ETFs. You could go as a 35-year-old who might be in this situation right now and you get a side hustle and you're making $300, $400, $500 a month with your side hustle and you put it in the S&P 500 every month for 30 years, 35 to 65, that's $1 million right there. 10, 11% return, whatever you want to think. Even would go 9. We'll do inflation. Make it $400 or $500. You just do this side hustle for a couple of years. You're doing your thing. Money goes in. You're having a good time. That's side hustle. Then after you hit that millionaire status, because the S&P goes up over a long period of time, you can now begin to diversify this extra side hustle money. Maybe you're doing the rental real estate. Maybe you want to get some dividend ETFs. Maybe you want to have something more risk off and preserve your millions of dollars with bonds, right? So I truly believe my team here with the S&P, the side hustle, rental real estate, bonds, and dividend ETFs is going to create the most millionaires because it's the easiest. It's what everyone listening right now can go do if they want to go find that margin in their budget, go invest a couple $100s, couple $1,000s a year, gets invested in the S&P very simply. Do it in the any which way. I don't care the account. Accounts don't matter when you're 65 years old. Be taxable, be 401k, Roth IRA, whatever you want to do. But getting in the markets, investing consistently over a long period of time, and then beginning to diversify out of pure play equities when you are in that retirement. You want to go some real estate, maybe you want to do some dividends or some bonds or things like that. So not only do you have wealth accumulation with my team, but you have wealth preservation with my team. I rest my case.
I agree. Chef's kiss.
Look,
I agree.
The only thing I was going to dog on you about is that, of course, all the emails to set up this show today came from Austin. And I thought it was very convenient that the first pick of this thing came from Austin. You know, he gets the first pick. So this is just like any other fantasy football draft I've ever been involved with, is that, of course, you have the best portfolio. You got first pick on everything. You gave us all the dogs after you had we got your leftovers. So.
Hey, it's not about best. His is the one that creates the most consistent millionaires.
It is. I was looking, like, if a client prospect shows up with Austin's choices, I'm like, this is a good decision maker. This is a money master, really took some choice. We have some pilots that I often said they missed their calling. They were great pilots, but man, oh man, their portfolios when they showed up as prospects were just jam up. Their financial planning was jam up. They only hired us because they were getting older and they didn't want their spouses to get ripped off. And Austin showed up with that type of portfolio. So I give you credit. I can't even talk trash on it because it is there's solid picks, but you stack the system by getting the first pick.
Here's my take. Austin's I really like it. I think it's very astute. I think it's great for long-term, slower wealth building. But I feel like for the 20, 30, 35-year-olds out there, that's going to be too slow a pace because nowhere in that portfolio is that big, punchy opportunity to make really good money to jumpstart all of this. And that's why I think the small business ownership and the private equity reigns supreme because you have more shots, more risk, but more shots to build wealth quicker and then let compounding do its job over decades.
Ah, man, I don't know. I think the side hustle side of it's going to take care of that. I think the side hustle side of, $400, $500, $600 a month, and you're just putting that in the S&P. I think that's the big takeaway here is like, I feel like a lot of people make the mistake of thinking that they need to have 10, 20, 30,000. Let's be real. No private equity is going to let you invest with, less than 50,000 or 30,000. So you got to write some big checks. And I think that's sort of a gatekeeping mechanism for a lot of people. Whereas there is no gatekeeping for the fractional shares of VOO or, VTI or, whatever, VU and chill, as you guys like to say on the show. It's super easy. Anyone can jump into it. And I think it creates the most millionaires, not the fastest millionaires, but the most millionaires. I think that team is going to do it.
But I do think Roberts is probably the most Deca millionaires and beyond.
Yeah.
But we need to be honest. There's a failure filter that is thick. I mean, it is. You're the exception to the rule when you make it through that filter.
But I want to add one more thing, and maybe this is outside the rules. Maybe I'm drawing outside the lines. But if I have Roth IRA as my first pick, my quarterback, my star, technically, since I can't own the S&P 500 index, why can't I own VTI and own the entire stock market in the Roth IRA as that form to help balance out not being able to have the S&P 500? I mean, VOO is obviously outperformed VTI by like 80 basis points a year, but still I'd be in the game with that long-term wealth building with the Roth IRA using VTI.
Your biggest problem with that, though, is just the $7,500 cap. It's the same problem with Bo's HSAs.
True.
That's why I like my 401k gets the Roth 401k option.
Mm-hmm.
I mean, that's why that thing, it's doing a lot of heavy lifting.
Look, if I'm keeping score here, I think mine's the clear winner for folks in their 20s. Obviously. Look, I don't.
Why are you still advocating? I thought we all agreed that Austin's is like the best try.
There are some categories here. Mine is the clear winner for those in their 20s.
No way.
Austin's 100% is going to be the one that creates the most and the most consistent millionaires. It's the highest likelihood of success. And I think a lot of people, to your point, Robert, they want to get rich quickly, but it is much more simple and it is much more higher probability for success to get rich slowly. And I think Austin sets you up for that. Now, I do want to give yours credit for that guy or that lady that's in their late 40s and they've had some success and they are trying to move into those upper echelons. I think yours is the one for the 45-year-old and above. So like there's a home for all three of our portfolios and I am on board with that.
Mine is the CPA in the room. I mean, do you see all the tax savings I have with the cash flowing real estate? We need to run a cost segregation on that. All the money you're going to be able to defer, because even when you're in your peak earning years, the 401ks go let you hide a lot of money legally. I mean, mine is the CPA in the room. You don't see it look boring because we're not wearing flashy stuff. We don't have exotic cars, but we're the richest person in the room.
Now, here's the final question. Let's think through. Give me top 3, perhaps, or maybe 5. We can go 5 or 4, whatever we want to do here. But like someone that's not 25, they're not 45. We all know who's going to make the most millionaires, whatever. But maybe somebody who is just starting out. Maybe somebody who's listening to the show for the first time because their uncle sent it to them. Maybe they're younger, maybe they're older. It doesn't matter how old or young they are, but like they're really just trying to make that first step toward building wealth. Maybe what are some of the most important wealth building tools across all of our teams here that person can lean in on? He pulls out Foo.
I think that realistically, no matter where you are in your journey, I mean, obviously S&P 500, a way to invest that's accessible to anybody, whether you have $20 or $200 million, is a great tool. So I think from like the tool to use, S&P 500, whether you're doing that in your 401k or in your Roth or in an HSA, it's a great wealth creator. Mm-hmm. But I do think no matter whether you're that 22-year-old or that 28-year-old or that 35-year-old or that 50-year-old, figuring out how you can develop your skills and how you can improve your shovel and how you can increase your income. And whether you're a small business owner and you want to take it to the next level, or you are just a corporate employee and you want to move to the next promotion, if you can constantly be learning and improving and bettering yourself, that's going to help you along in your wealth building journey. So in my mind, those two combined throughout all ages kind of transcend all 20 of them.
I really appreciate skill development and S&P 500, right? Because at the end of the day, it's not just, we talk about this all the time on both our shows where it's like, it's not about cutting so much of your monthly where you've only got, razor thin margins to save and invest, but it's also like going out there and earning more money. Mm-hmm. It's going out and getting that promotion or being in a career that's durable and is going to continue to trend up and to the right. And so when that promotion does come, you've got the extra margin now go invest into these index funds and ETFs. And that skill development, I think, is really, really important. Something I think though that is an underrated one here, and I know a lot of people don't do it. Robert did it growing up. I did not do it, but I think the people that end up doing it really begin to leaps and bounds ahead of their peers, and that's house hacking. I really think if someone is disciplined enough to be in their 20s or their 30s, whatever it might be, and say, listen, I'm going to go buy a duplex or a triplex or a quadplex. And we talk about the 5% Fannie Mae or, all that other ways they can do that. There's different types of loan options. But if you can get into house hacking, I think you are setting yourself up for success, because that's, in my opinion, this like delayed gratification mechanism that's going on in your mind. And you're saying, I'm not going to get the white picket fence. I'm not going to get that cool condo that I want. I'm going to house hack. I'm going to have roommates in my 20s and 30s, essentially, right? So that I can trend up and to the right from a net worth perspective. They can start to pay off this note. And then eventually I'll start, getting my own place after this is now cash flowing, or, sell it for a profit, whatever's going on there. But I think another one that's underrated on this list beyond skill development and S&P 500 is house hacking.
For me, someone mentioned earlier in the broadcast about my portfolio would probably, if successful, build the most decamillionaires. I think that really all hinges on owning assets. So whether it's real estate, small businesses, or whatever it is, owning assets to me gives you the most upside potential and success ratio to be able to build wealth long term. So I think that's an underrated part of this, because we don't want to see people that work a 9-to-5 job forever, even though they can still build and become millionaires. We want to see people out there with that side hustle, out there investing or starting these small businesses, because we live in an era right now that there are tens and tens of thousands of small businesses that are going to be shuttered because all of these baby boomers did not have, plans of what they're going to do with their business when they retire. And so I think for me, the underrated one is really all about owning assets.
I mean, it's funny you said, because Robert, that was one of the things I remember when I was younger that I caught on coming not from money. Is I remember I was jealous is not the right word because that's a strong word, but I remember being jealous of trying to see people who had more stuff. And I was trying to figure out, even though I was starting to make good money, I was like, there's something different. And you still felt vulnerable. It wasn't until I figured out the game of, man, if you own stuff, it protects you from inflation. It protects you from, now the money can actually, the assets can generate income so you don't have to work. You own your time that much sooner. That's the game I try to tell all young people. The sooner you can own stuff, the better you'll be in the long term. And now I know earlier I was holding this up and y'all are like, is he really promoting his system? Yes, because I think it's that good. And the fact that, because 2, get the free money from your 401k. And then I think the house hacking fits under 4, because I do think this is the way you're going to get into housing right now with the huge run up post pandemic of purchase prices and where interest rates are. Use other people's money, but get the lower rates and other things. House hacking. And then Bo and who got the Roth IRA?
That was Robert. You got the
Robert.
Roth.
Bo and Robert are step 5 by getting the HSA, and those are some of the first places that you'll start the investment process because they're just so tax favored for you. So I think we all have moments. That's why this was a fun thing, is because we all got a little piece.
We did.
Of the success, and every one of these in their own way. And that's kind of what I love about what we get to do for a living. As I always say, when people show up, I'm a big Dolly Parton fan, and she's got her coats of many colors. Mm-hmm. And I feel like every prospect that shows up is their own coat of many colors as they show up with their own life stories, and nobody's exactly the same. And I love that we get to kind of take them as they are and try to see how we can maximize that.
Well, and I think the important part too is, and why I love this episode so much, so thank you guys for joining, is personal finance is personal. You can tell my team is built on some risk, entrepreneurship, all of the above. You can tell your strengths, Brian with, CPA background and all that, Austin's strengths of building a really strong team, Bo building the skill set and all those things with the entrepreneurship. So I think they're all really good, and they really play into our overarching message from both of our teams that personal finance is personal. Everyone's going to have a different path. And this really highlights our brains of how we've done it and how we would continue to do it to educate others in their path.
This is a blast. I don't know how entertaining everybody else will be, but this was fun for us.
I had a blast, and we're so grateful you guys came. Now, before we wrap this conversation up with Brian and Bo, got to give a shout out to public.com, the investing platform for those who take investing as seriously as we do here on the Rich Habits podcast. On public.com, you can build a multi-asset portfolio of stocks, bonds, options, cryptocurrency, and now generated assets, which allow you to turn any idea into an investable index using AI.
And it all starts with your prompt. From renewable energy companies with high free cash flow to semiconductor suppliers growing revenue over 20% year over year. You can literally type any prompt and put the AI to work. It screens thousands of stocks, builds a one-of-a-kind index, and even lets you backtest against the S&P 500, all with just a few clicks.
Generated assets are like ETFs with infinite possibilities. They're completely customizable. They're based on your thesis, not someone else's. So go to public.com/richhabits and transfer your portfolio today. That's public.com/richhabits.
Paid for by Public Investing. Full disclosure in the podcast description.
All right, Robert, back to our conversation with Brian and Bo. Let the people know what's going on with the Money Guy Show. What do you guys cover on a weekly basis? Talk about the live stream that I was on, a couple months ago. Like, what's going on with the Money Guy Show, and want to encourage people to go check you out.
Yeah, every Tuesday at 10 a.m. we do a live stream. Come hang out with us and a bunch of our folks. We answer questions. We believe there's a better way to do money. So we have new shows that come out on YouTube every single week, new podcasts that come out every single week, because we really do believe that there is a better way to do money, and it is attainable and accessible to everyone. That's why we have tons of free tools, tons of free resources out at moneyguy.com/resources.
Yeah, and I feel like Robert did a great job of talking about, building wealth in his journey. And I felt like I resembled or felt the same thing he did, is that we definitely live in a system right now where there are some hiccups and bad things that people are facing, whether it's housing or education. But I'm also here to tell you, don't let people sell you the complete victim side of things, because it is the greatest time to build wealth. I really do believe that. If you can, now look, there's going to be, like I said, headwinds, but I think watching our type of content, hearing how you can use technology to leverage some of this to your benefit, I have no doubt that our audiences 10 years from now will be sending us, things that they've conquered because they were using this to plant the seeds.
Yeah, Brian, I tell the story all the time of even just in like right around 2000, 2003, 4, 5, when I wanted to launch a consumer product, I had to build a website and a back end, $15,000 to $20,000. I had to go get all of the trademarks and all these things. I had to then go buy advertising because there was no such thing as free marketing through social media. So when people come to me now and they're like, man, it's tough out there, the market's tough, everything's expensive, it blows my mind. It is the greatest time in human history to build wealth, and you can start a company, get your branding, get your social media, get everything up and running for $100 or less, yet people still find the victim mentality. And that is why Austin and I lean on this mindset shift all the time, because in my opinion and in most of my experience, mindset is what prevents people from prevailing in their financial journey. And that's why I feel blessed every day to be able to work with Austin on this podcast and bring on guests like you guys to help people understand it is not easy, but it is definitely much easier because all of the tools that are out there and getting better every year to help people build companies and build wealth.
Thank you for having us on. This was a blast.
Yeah, and be sure to go check out Millionaire Mission. That's also a great book written. Oh, here we go. Put it up. You got it?
I'll send you a check. Oh, yeah.
Right here,
We're ready.
man. I got
Props
you.
ready, man.
Rock
Props
and roll, dude. Thanks, guys, for coming on the show.
Awesome. Thanks, guys.
Robert, what a fun conversation with Bo and Brian from The Money Guys. Be sure to go check out The Money Guys show. They are incredible friends of ours here hanging out in Franklin, Nashville, greater Nashville, Tennessee. We're so glad they joined us on the show. Links to their accounts and all the fun stuff in the description below. And hopefully we do this again. Maybe this is our annual fantasy finance draft that we do with The Money Guys, and we switch it up with different types of wealth building tools every year. Who knows?
Yeah, I thought it was incredible. And we talked about it not being as educational, but I think we were wrong. I thought it was very entertaining, but also very educational. I had a blast. They had a blast. But also, I hope people really share this episode and take notes, because there's a lot to learn from 4 really big brains and how this worked in our financial draft. So we definitely need to make this a yearly thing or maybe a quarterly thing. I don't know, but we'll see how the audience takes this episode.
Absolutely. With that being said, everybody, thanks so much for joining us on this week's episode of the Rich Habits Podcast. Please consider sharing this episode with a friend if you learned something, if you were edutained or whatever the phrase is there. We hope you liked it. If you liked it, consider sharing it with somebody. And do not forget to follow us on Instagram at Rich Habits Podcast. Subscribe to the Rich Habits Podcast newsletter. Just type in Google Rich Habits Podcast newsletter. It's going to pop right up. And check out the Rich Habits Network, our community for our biggest fans. We've got like 10 hours of video coursework over there. We're hosting live streams now twice a week, one on Tuesday nights, and we got office hours that take place every single Friday. We're having so much fun and cannot wait to have some of you guys over there with us.
And speaking of tools, let's give a shout out to ourselves for Wall Street Favorites. I think it's an incredible tool everyone should be using in their wealth building journey. So make sure you go to wallstreetfavorites.com.
Thanks, everyone, and we'll see you on Thursday.